do want to take some time tonight to talk about tops, market tops. And when we met last week on Thursday night, it's down here in Time Compression Trading by Jason Jankowski. 5 basic market structures. Again, topping, bottoming, uptrend, downtrend, or range, which is sideways action. We talked about bottoms. Tonight we're going to talk about topping markets. Now I've got Bitcoin over here on a chart. We're back in December of 2017 and Bitcoin is at 11,700. We're going to read a little bit about tops. We're going to move a few candles forward and we're going to talk about what happened and how we could take that information even in real time and start to look at some of these little clues that are telling us, something different might be taking place. Maybe we need to look a little closer and think about what we're doing, think about our positions. And this sort of topping behavior psychologically happens at all-time highs, and it happens to a smaller degree on swing highs. So you can kind of take this macrocosmic view and apply it to the minor swing highs on a smaller scale. So let's just dive right in, and this will start to make more sense. So the quote here that Jankowski gives us is, the graveyards of Wall Street and LaSalle Street are full of traders who were right too soon. Okay, they were right too soon. Now he says the ability to see that a market is ripe for a reversal from uptrend is not that hard to have. And in fact, I would argue it's easier to see a top than it is a bottom. He says the problem is that most traders are looking at the price rather than the time element. That's why early shorts are the blood to bring the market to the actual high prints. And we'll look at that. We will look at how the shorts came in early and too aggressively, and they got their shorts ripped off. So what he says here is, he says the time that passes between the entry and the buyer's exit is when a bull market has a secure uptrend. So that's a really interesting way of looking at it. Now, this idea that the market is topping, from a price standpoint, a top means we've reached the point at which everybody, most of the market, the big players in the market have decided that's the most that this asset or this currency or this cryptocurrency should be worth, even beyond what it should be priced at. We've reached the point where it's just, it makes no sense at all. I mean, you can't even argue speculatively anymore at this point that this is a good point to buy. But what happens? People come out in force to buy. They come at the worst time because the market is reaching not just a high in price, but a high in the frenzy of hype. The shilling is getting to a maximum. And why does this happen? Why at the top of a market do you hear more advertisements, more mentions in the mainstream of Bitcoin back in 2017 than you hear today? Why is that? Well, that's because the people who have the most skin in the game, the big boys, the market makers, the exchange players, the off-the-counter thousands of Bitcoin whales that show up and dump all their Bitcoin onto the exchange right before these moves take place, they put all of those advertisements out into the world to shill all of the cryptocurrencies when they're at the all-time highs so they can get out of their position. The all-time highs provides an opportunity for the people that are in the know to get out. And they have been accumulating for so long, they've bought so much volume that in order for them to get out, they have to drive the market to a place that trips people up psychologically. It tricks people into thinking this is going to make me money very easily, very quickly, and if I don't put my money into it now, I'm going to get left behind. It turns the FOMO on to the maximum degree. So, Jankowski says the important part of finding a time-compressed topping market is not price, but the perception of price. All bull markets end at some point. A zero-sum game is played the way it is because every buyer must meet a seller. And if a market is rising, there will be a point where the price becomes too high for every participant, whether bulls or bears. In the case of the bulls, it's time as a group to liquidate and take your winnings, to get out. In the case of the bears, it's time to enter short. The sentiment for the majority of people changes to the other side. A topping market happens when bulls and bears both agree that now the market has run out of potential in the uptrend. In other words, both sides decide it's time to sell. And they do that very close to the same moment. So it's not necessarily that the price has been reached. The price matters, but it's that at the time we reach that certain price that triggers this psychological switch in most market participants. That moment in time is when the reversal takes place. So he says a topping market happens when the activity changes significantly at whatever the price in the market happens to be. That means your baseline of determining a time compressed topping market is volume and how it's changing. And we're going to look at that in a second on the Bitcoin chart over there. You need to watch for a change in volume from the baseline norm. So if I pull back a little bit so we can kind of really get a perspective on volume here from a zoomed out view. Okay, this was 2015. This was a very big low swing down here, and a huge amount of volume came in. There's Dan Larimer or somebody with a significant there. Craig Wright came in and decided to buy a bunch of Bitcoin. Who knows? And then what happens? The market kind of reaches this baseline of volume. As we start to pick up in 2017, even in the spring leading into summer, you start to see this baseline of volume really pull up. Welcome, Taco. Better late than never. Hey, no problem with that. This baseline of volume starts to pick up and things start to change and we get real choppy with their volume. And this happens all in 2017. And then as this price starts to pick up, and we can zoom in the volume here, we see the volume. Let me get my tools here. We see the volume starting to gradually do something like that as the price is moving up. Now that's a very convergent action of price. The price and the volume are leaning into the push up. Okay. Now what we're going to do is we're going to watch a few candles come in and we're going to talk about that. Okay, what happened? In just 2 days, we went from 11,000 to 14,000, went all the way up and tapped that high at 19,600. Now this is when the FOMO turns on. Back here a couple of candles ago, people were like, should I buy? Should I buy? I don't know. I missed out. I should have bought back here, but I didn't. This is when all of the people were screaming, come get your Bitcoin. Kyle, that's when the media started shilling. This is when the people came in who were paying attention. And let's see, where was that sense he said? This is what the problem is. Most traders are looking at price rather than time. We got almost to 20,000. A lot of people came in and said, you know what? This market's going to turn here. This is too far. I'm going to put a short on. This is why early shorts are the blood to bring the market to the actual high print candles. So let's watch what happens. I'm going to slow it down again just so we don't miss our move here. We pulled back, we pulled back. That's when all the shorts came in. Watch what happens. Maybe some more shorts coming in. Uh-oh. Uh-oh. And that was our actual top. And notice there's not a lot of buying taking place anymore. The buyers gave up back here. They bought, they thought it was going to go to a new high, so nobody's buying, and that's when the real pain comes in. This is exactly what he's describing. Early shorts get liquidated, and that short squeeze is what pushes us to the actual high point. This is when the smart money put their shorts on. This day, right here, December 17th, the smart money came in and put a big short on, and then they waited and they watched. And maybe some of the aggressive ones took a little profit, but they were waiting. And what did they see? So far, they've had confirmation they were right. We're going to speed it up a little bit. And it's going to pull back. This is the chance for them to enter their next short because they've now squared up most of this move. And in fact, if we pulled a retracement here, it's not perfect, but they breached our 618. They gave a nice swing almost to the 786. And at that point, most of the traders who were aggressive, who got a first short in here, added to their position. And then what happens from there? We never make it back. Not for a long time. The people who put a short here and here, nice and safe. Their liquidation might be sitting here or even here, and they're just making money as the market falls. While everybody else is hodling to oblivion, they're making money and deciding where they're going to take profit. That's a topping market. This is the point when everybody decided this was too high. Right here, they weren't sure. There was still people buying here. Well, the shorts came in. The dumb money shorts thought they were going to make it easy. They got liquidated. The smart money shorts came in and they drove it into the ground. Then the dumb money shorts, this huge volume of shorts came in and they got liquidated on the pullback. ABC, pullback. Smart money shorts got in, hid their signature, and drove it into the ground. Here's where all that dumb money came back in and got liquidated. You can almost go back in time and read the story with full clarity. Hindsight is 2020. Nothing was truer in trading than hindsight is 2020. But when this is happening in real time, this is the problem we run into. When this is happening in real time, how do we know the top is reached? How do we know? How do we know that this is the swing to get out? Watch the volume. Watch the price. What's happening? Price swung up, a lot of buying. Selling came in with a bearish engulfing candle. Those of us that know our candlestick patterns know a bearish engulfing is a potential reversal sign. Volume disappears. Right, Taco? Volume dropping off. That's a sign that we have lost a lot of our interest in the push up because the volume's dropped off. And now what's going to happen is these dumb money shorts are going to get squeezed. That's the end of the swing. And we're going to head on back down after we reach the little top from that dumb money squeeze. And it never comes back again. That's really what's forming these shapes, you guys. The smart money pushing it up, the dumb money getting in here when it's too late, and getting liquidated. So topping markets are really determined not by a price level, but by a perceptual price level. And when you start to see the signs on the chart that perception is changing, not that price is changing, but that perception is changing. This volume, let me see if I can get a vertical line in here for you all. This will see it a little bit better. This volume peaked. The buying volume peaked on the first poke up. On the second one, there was nothing. That is your 1-2 punch. That's your sign. When you've got volume peaking at the front of a push, and then you have a check-in with that level with no support on the side that you were just on with all of that support, sentiment has changed. And how do we know this? Hello. Hello. Everything shifted to the sell side. Close and reverse. The big boys went from buying to push it to the end to turning around and selling. And I guarantee you a lot of this volume, if we dig into this candle, was exhaustive selling in that wick. I don't even know if, I'm in bar replay. I don't even know if I can get all the way back there on a lower time frame. I might be able to. My drawing tool off here. But you have to dig into these in lower time frames. They kill that. There's the all-time high is gone now on the 4 hour. You can go back into replay back there. I'll leave it to you all to do it. And you can just look. I remember from being there that we went straight up and it did not sit there for long. They came in and got rid of those positions the second they had that opportunity. Now, what does this mean for us now? Well, it means that as this price starts to squeeze up in here, we've got these moving averages to fight. That's one thing we're fighting. We're fighting the last swing high to the last swing low. And you could argue maybe something more like this because of the bodies. And this makes a lot of sense, hitting the 786. I like the price action. Are we going to break this? And if we do, we've got this to look at, and then we've got this to compete with. And in order to convince us that we don't have a swing high topping at either of these places, we would have to see the buying volume start to increase and push past these critical junctures, past these important fib levels, past these moving averages on the large time frames, and they would have to do it with sentiment to convince us that something has changed. That's what everybody gets hung up on. They are so busy watching this. I always get my drawing tool left on here. Give myself some more room to work with. So busy watching this on Coinbase and thinking that they have now missed something. Here's my triangle, and maybe I've done some kind of a fib extension here. Let's just pick a spot. Let me see, where do I see a leg of money? We came in, we bounced, and we pulled back, and then here's some buying that comes in here. Something like that. Now I do something like that, and I see that this really lines up with this stuff here, and maybe I'm a little off. Maybe it needs to be, adjusted a little bit. Maybe I want to see it line up a little better. It's either that or that, and either way, at most, you've got this much room left. And then what I'm looking for, as somebody who knows what turns look like, is I'm looking for volume to pick up, especially on the sell side. And I'm looking for those bearish engulfing candles. I'm looking for those exhaustion wicks with the selling that comes right back in. I'm looking for the volume to pick up on the selling side and starting to push us back down. If that doesn't happen, then what I should see is the buying volume pick up, a break, some kind of a hook, whether it's, and let me zoom out a little bit and get a better view. Horizontal line. Whether it's one of these important levels, and I'm just looking left, guys. I'm not even using fibs here. I'm looking at where they found some little bits of support here before. And you can see they tucked in here. They should do something where they break hook and go, or break hook and go, and it should be with a lot of volume. If we don't see that, we cannot justify that we're going higher. What we'll probably see is a little microscopic version of a topping market, because we should get at some point between here and 10,000, because we're looking for a lower low, and maybe it's somewhere in here, because we've got this little square up here. They've already squared this one up. Somewhere between here and here, we should see those signs that we're making a turn and we're topping at a smaller level than the all-time highs. Now, I'm not going to go into all of his examples because Scott's going to come back real soon and close this off. But what I'm going to end with is his little notes here about a topping market. Everybody wants to catch the bottom. Everybody's trying to catch the long-term bottom of Bitcoin to buy and hold for the long term. And here's the beautiful irony in this. He says the topping market is your best opportunity to get rich, no matter how you define rich. It's not a bottom market. It's not getting in low and selling high. It's getting in, selling high, and waiting for the market to retrace. That's your best opportunity to get rich. Wherever we bottom out now is nowhere near the opportunity we had to make money back in 2017 if we'd have been able to, if those of us that had the knowledge had a safe place to short, that would have been the best opportunity to make money. He says the best topping markets are those that are at an all-time high level or near one. Check. Go all the way back to my day. It's too hard to scroll. All-time high. That is a huge opportunity there. How often when we're trading and investing and we're learning how this works, do we do the opposite of what the best option would have been? We're all trying to catch the bottom, and at the end of the day, the top was the best opportunity. The beautiful news about that, everybody, is guess what? There really is no rush, because everybody in this room, for the most part, I would bet, believes Bitcoin's going to make a new all-time high. Is there anybody in this room who would raise their hand right now or drop something in the chat and say, I believe Bitcoin has made its all-time high and it will never make a new one? And I'm going to give that 3 seconds to see if anybody thinks that we'll never make a new all-time high on Bitcoin. 3, 2, 1. No, didn't think so. It doesn't matter whether you think we're going to range, guy. I'm not talking about the immediate future. I'm talking about if we could, for right now, if we could click a button on this chart and view the entire history of Bitcoin from the start to whenever it finishes, 1,000 years from now, I don't care. Is there anybody here who thinks we won't get back to that all-time high at some point and probably break it? Kyle, worst case is a double top. So what I am saying to you all is, even if you miss the bottom, you can trade all the way to the next high, even from here, and you will get a better opportunity than the bottom that you missed. Have you ever thought about that? Have you ever stopped to recognize that no matter how much you miss of your bottom entry, by the time we get to the next all-time high, you're going to have a better opportunity to make money on the short side in a faster way than you made trying to catch a bottom for 3 years? Because look how long it takes to go up. Look how long it takes to come down. Jankowski says, make part of your daily analysis a study of markets that are near or at all-time highs. We're in the middle of what the stock markets just were at, all-time highs. There's usually 2 or 3 markets a year that had a big move higher and offer you this opportunity. The best way to trade them is to take a small position the day or 2 after the big volume drop from the highs, the liquidating test. Let's look at this one more time. Where's the all-time high volume? Right there. And what does he say? He says the best way to trade them is take a small position the day or 2 after the big volume drop. So you could have taken a small position here in these couple of days. It would have pulled all the way back up. You would have been like, oh, geez, look at, there's no volume and we're back up here and nobody's buying. Now I can enter the bulk of my short. This is a much better risk to reward on the short side. Bitcoin gave you a perfect opportunity at an all-time high, at a topping market, threw it in your face, said, here's a head and shoulders. Anybody who knew tops and how to short markets had the opportunity of a lifetime in Bitcoin right there. I mean, that was huge. How many days did it take for it to drop? 50%? 1, 2, 3, 4, like a week. You could have exited, it have swung back, you could have went back in and shorted some more. Now he says, if you can get positioned reasonably well, look for a price drop that has a close under the previous upside volume and add to the position. At this point, you might want to buy short-dated options. Now he's getting into some other equity stuff. Find a way to continue adding to your open short. When you're shorting, you sell the rips. They ripped, you sell. They ripped, you sell. They ripped, you sell. They came back, you consider, you watch, and they proved you're okay. It is the opposite of buying the dip on the way up. But the thing about markets on the way down is they tend to fall faster than they can climb up. So your opportunities to make money in a smaller amount of time are greater to the short side. There is no rush. As long as you are studying and learning and improving your game, you can make money on both sides, and catching the bottom is not going to be the end-all be-all greatest thing you ever do in your trading. It's just not. Everybody who's sweating themselves, stressing themselves silly, worrying night and day, when is Bitcoin going to make this next drop so I can finally get in and start trading? You're kidding yourself. You're hiding from the pain. You are telling yourself, I'm being patient, which is good, but you're making excuses for why you can't be trading. You can trade any type of market. Nobody should ever say to you, you cannot trade right now and make money. The only difference between one day to the next is the level of risk. If you are a new trader, you should not be trading counter to the big picture trend unless you like getting your head cut off, trading wise.
Did you tell me they were going to get a head cut off?
The last thing I was going to say before I pass it back to you is you only need 1 or 2 markets to cooperate every other year or so to make your unfair share. Keep looking for them. Had you got Bitcoin here, had a small leveraged short, 2-3 times leverage safely, got it in up here, waited, bought to cover here, added to your short here, and sat back, by the time you got out somewhere down in here, you'd be sitting fat and you might not even need to trade until they did bounce, 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 and you saw, ha, 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 I know what comes next. Now I'm going to add to my short. Boom. Now I'm getting out. Now I'm just going to wait. You don't need to trade every day. You don't need to catch a bottom. You don't have to do anything you don't want to do in trading to make money. But what you have to do is have a plan, control your risk, and be prepared to lose properly. As long as you can do that, what the market is doing is semi-irrelevant. It's only relevant in so much as you are assessing the risk for your position to win or fail. That's it. The conditions of the market tell you how to play the game. They don't tell you whether you're going to win or lose. That is a very important distinction that you have to understand. Head cutting off is banned during social distancing. The market can throw ninja stars, Bill. It can hit you at a distance. It don't need to get 6 feet. So if I can leave you all with one thing from this lesson tonight before I pass back to Scott and we wrap this room up, because Lord help us if we go another 2 hours again. Zoom will never end before I can get it done by 1 o'clock tonight.
Y'all, I told her before the room I wasn't going to do it 20 minutes and we couldn't go 2 hours, and y'all know what I did.
Please, please, please do not FOMO in here. Do not think that you have to get into the market right now or you're going to get left behind. You might, and if you don't get in, please be prepared to watch it bump up another 1,000 or 2,000 before it turns. But what you should be doing if you make a choice right now to not enter and you know you're stressing about missing out, you better have a plan that says something like, I will not trade Bitcoin again until it drops 20% in a day, and I need to see signs like bearish engulfing candles, like a turn that's proven with volume, signs that they have made what I'm expecting and that I have a good plan based on those expectations that I can execute on. If you're just wandering around with your fingers over your eyes, hoping that Scott's going to tell you buy here and then you're going to make a lot of money, you're probably going to be disappointed.
Well, I told him about KNC, didn't I?
You did.
I'm just messing with y'all. I'm messing with Mike.
So at the end of the day, have a plan, stick to your risk. There's no rush, and know what type of market you are in. If you are going long, then you think you're either in a secure trend or you think that you have a quick trade and you have a very good exit plan in place. Know which one it is, trade accordingly, and then whatever happens at the end of that trade, go back and figure out whether you were right or wrong and how you can improve yourself next time.